Imagine buying your dream home in Florida, warm weather, no state income tax, beautiful beaches just minutes away. You've planned for the mortgage, you've budgeted for property taxes, you've even set aside money for maintenance. But there's one number nobody warned you about: your home insurance bill. And in some Florida cities right now, that number is so high it's forcing people to make an impossible choice: pay the premium or pay the mortgage. Because in some cases, you genuinely cannot afford both. This isn't a scare tactic, this is math. And it's happening to real families, real retirees, and real homeowners across the Sunshine State right now. So today, we're counting down the 10 Florida cities where home insurance has become so expensive, it's quietly destroying the dream of homeownership, one renewal letter at a time. Stay with me through the full list, because the number one city is going to surprise you. Florida has always been a magnet. Millions of Americans have moved there chasing retirement, warm winters, and a lower cost of living compared to states like New York or California. But something has shifted dramatically in the last 3 to 4 years. Florida is now the most expensive state in the entire country for home insurance. The average annual premium is nearly 3 times the national average, and in certain cities, homeowners are paying 5, 6, even 7 times what someone in Ohio or Tennessee would pay for a similar home. The reasons are complicated, but they all trace back to hurricanes, rising sea levels, insurance company exits, and a legal environment that made Florida one of the riskiest markets in the world to insure. In this video, we're going to walk through 10 specific cities where this crisis has hit hardest. We'll look at what's happening, why it's happening, and what it actually means for the people living there and for anyone thinking about moving there. Let's get into it. City number 10, Jacksonville. Most people think of Jacksonville as one of the safer Florida cities when it comes to storm risk. It's in the northeast corner of the state. It doesn't get the direct hurricane hits that South Florida does. But Jacksonville homeowners are still getting hammered on insurance. The average annual home insurance premium in Jacksonville now sits somewhere between $3,800 and $5,200 depending on the neighborhood, and that number has climbed sharply since 2021. Here's why. Jacksonville sits along the St. Johns River, and large portions of the city fall inside FEMA flood zones. That means homeowners need 2 separate policies: standard homeowners insurance and flood insurance. When you stack those 2 together, the total annual cost can easily exceed $7,000 for a mid-range home. And the river flooding isn't theoretical. After Hurricane Irma in 2017, Jacksonville saw some of the worst inland flooding in its history. Insurers took note. Premiums went up, and they haven't come back down. For retirees on fixed incomes who moved to Jacksonville looking for affordability, this has been a gut punch. City number 9, Daytona Beach. Daytona Beach has a long history as a working-class coastal city, affordable by Florida standards, known for its motorsports culture and laid-back lifestyle. That affordability story is unraveling. Homeowners in Daytona Beach are now paying average premiums between $4,500 and $6,500 per year. And in beachside communities right on the Atlantic, that number goes higher. The problem here is layered. Daytona is directly exposed to Atlantic storms. The housing stock in many neighborhoods is older, built in the 1970s and 80s, and older homes are much more expensive to insure because they don't meet modern wind resistance building codes. Several major insurance carriers have already pulled out of Volusia County entirely. That's pushed thousands of homeowners onto Citizens Property Insurance, Florida's state-backed insurer of last resort. Citizens was never designed to carry this kind of load. And its rates have been rising steadily. For people who bought modest homes in Daytona hoping to age in place affordably, the math is no longer working. City number 8, Pensacola. Pensacola sits in the Florida Panhandle, right on the Gulf of Mexico. It's one of the most beautiful coastal cities in the state: white sand beaches, a deep military presence, and a relatively low cost of living compared to South Florida. But the Panhandle gets hit by hurricanes. Hard. Repeatedly. Hurricane Ivan in 2004. Hurricane Sally in 2020. Multiple named storms in between. Each one leaves a mark, not just on the buildings, but on the insurance industry's risk models. Today, Pensacola homeowners are paying average premiums between $5,000 and $8,000 per year. For waterfront or near waterfront properties, it's significantly higher. What makes Pensacola particularly difficult is that many residents are military families or retirees, populations that are often on fixed or predictable incomes. When insurance costs spike by $1,500 or $2,000 in a single renewal cycle, there's no easy way to absorb it. Some homeowners are dropping windstorm coverage entirely to lower their premiums, which means one serious storm could financially wipe them out. That is how desperate the situation has become. City number 7, Fort Myers. If you watched any news coverage after Hurricane Ian hit in September 2022, you saw Fort Myers. The destruction was staggering. Entire neighborhoods were flattened. The storm surge swallowed streets whole. The damage in Lee County alone exceeded $100 billion. Fort Myers was already an expensive place to insure before Ian. After Ian, it became one of the hardest markets in the country. Average home insurance premiums in Fort Myers now range from $6,000 to $12,000 per year for standard single-family homes. In waterfront communities, Cape Harbor, Palmetto Point, McGregor Corridor, annual premiums can exceed $15,000 or even $20,000. The claims from Ian bankrupted multiple Florida insurance companies. 6 insurers became insolvent in 2022 alone. The ones that survived repriced their entire Florida portfolios, and Fort Myers bore the brunt of that repricing. Many homeowners who rebuilt after Ian are now discovering they can barely afford to insure what they just rebuilt. The cruelest part? Some of them have never filed a single claim in their lives. City number 6, Naples. Naples is one of the wealthiest cities in Florida. Median home prices regularly top $700,000 and in some areas climb well past $2 million. The city has a reputation for luxury waterfront estates, championship golf courses, upscale dining. And even here, home insurance has become a serious financial problem. Average annual premiums in Naples run between $8,000 and $18,000 depending on location, home value, and flood exposure. For luxury waterfront properties, annual insurance costs can exceed $40,000 or $50,000. Now, for a homeowner with a $3 million estate, a $40,000 insurance bill might be manageable. Now here's something most people in this conversation are not talking about. The insurance crisis in Florida isn't just hurting current homeowners. It's quietly destroying home values, because a home that costs $800 per month just to insure is a home that a future buyer may not be able to qualify for with a mortgage. Lenders require insurance. If insurance becomes unaffordable or unavailable, the pool of buyers shrinks. And when the pool of buyers shrinks, prices fall. We're starting to see early signs of that dynamic in some of the cities on this list. The insurance crisis and the home price correction are now feeding each other. That's the story underneath the story. And it gets more serious the further we go on this list. City number 5, Cape Coral. Cape Coral is one of the fastest growing cities in the United States. It's a canal city, more miles of navigable waterways than any other city in the world. For decades, it attracted buyers with relatively affordable prices compared to nearby Naples or Fort Myers. That affordability advantage is evaporating. Home insurance in Cape Coral has become almost unmanageable for average buyers. Premiums typically range from $6,000 to $14,000 annually, and that's before adding flood insurance, which is essentially mandatory given how much of the city sits at or below sea level. After Hurricane Ian, several insurers stopped writing new policies in Lee County entirely. Cape Coral was left with a dramatically reduced market of carriers, which means less competition, higher prices, and fewer options. What's particularly striking about Cape Coral is the demographic. This city attracted young families, working professionals, and early retirees who stretched their budgets to get in. These are not wealthy households with financial cushion. City number 4, Tampa. Tampa is Florida's third largest city. It has a booming economy, a thriving tech and finance sector, professional sports teams, and a younger demographic than most Florida metros. It was widely celebrated during the pandemic as one of the best cities in America for remote workers. It also sits directly on Tampa Bay, one of the most hurricane-vulnerable locations on the entire Gulf Coast. Meteorologists have warned for years that Tampa is statistically overdue for a direct major hurricane hit. The The city's geography means that a direct strike from a large storm could produce catastrophic storm surge across massive swaths of the metro area. Insurance companies know this. Storm surge across massive swaths of the metro area. Insurance companies know this. And they've priced it accordingly. Average home insurance premiums in Tampa now range from storm surge across massive swaths of the metro area. Insurance companies know this. $5,500 to $11,000 per year. In waterfront and low-lying neighborhoods, significantly higher. But here's what makes Tampa's situation particularly alarming. Tens of thousands of people moved to Tampa in the last 5 years, many from high-cost states, many buying at peak 2021 and 2022 prices. City number 3, Miami. Miami is one of the most iconic cities on Earth. It's a global financial hub, a cultural powerhouse, a city that reinvented itself multiple times over the last century. It is also, by most measures, one of the most climate-exposed major cities in the developed world. Miami sits at an average elevation of just 6 feet above sea level. Large portions of the city, including Brickell, Little Havana, and Miami Beach, are at extremely high risk of both storm surge flooding and chronic tidal flooding that's already occurring today regardless of storms. Home insurance in Miami reflects that reality brutally. Average annual premiums in Miami-Dade County now run between $9,000 and $20,000 for standard single-family homes. Flood insurance adds thousands more. For condominium owners, mandatory building-level insurance assessments, passed down from HOAs following Florida's new condo safety legislation, are adding additional thousands in annual costs. City number 2, Miami Beach. Miami Beach deserves its own spot on this list, separate from Miami, because the situation here is in a category of its own. Miami Beach is a barrier island. It is surrounded by water on all sides. Its elevation is extraordinarily low. And despite decades of investment in pump systems and elevated roads, it experiences regular tidal flooding, called sunny day flooding, during high tides even without any storm present. This is what climate scientists refer to as the front line of sea level rise in the continental United States. Home insurance on Miami Beach has become almost surreal in its cost. For a modest single-family home on the island, annual insurance, Homeowners plus flood, can run $25,000 to $40,000 or more. For larger properties or waterfront estates, six-figure annual insurance bills are not unheard of. Some insurers have stopped writing policies on Miami Beach entirely. Those that remain charge prices that reflect what they believe the risk actually is, and what they believe it will become over the next decade. City number 1, the Florida Keys. If Miami Beach is the front line, the Florida Keys are the edge of the map. This chain of islands stretching 125 miles into the Gulf of Mexico represents some of the most beautiful and unique real estate in America. Key West, Isla Morada, Marathon, Key Largo, these are places people dream about. They are also, from an insurance perspective, the most exposed and most expensive properties to insure anywhere in Florida. Arguably anywhere in the continental United States. Home insurance in the Florida Keys, when you can even find it, runs from $20,000 to $60,000 per year for a typical single-family home. Flood insurance adds substantially more. Many properties in the Keys sit at elevations of only 2 to 4 feet. A direct hurricane strike could submerge entire islands. The private insurance market in the Keys has nearly collapsed entirely. Many homeowners depend on Citizens Insurance and the National Flood Insurance Program, both of which have been raising rates consistently and are themselves under enormous financial pressure. What's happening in the Keys is a slow-motion reckoning. So why is this happening, and why is it happening so fast? The answer lies in 3 main factors. First, climate risk is being reassessed right now. Insurance companies rely on statistical models to predict future losses. As hurricanes have intensified, flooding has become more common, and sea levels have risen, these models are being updated. The new models reveal much higher risks, which leads to much higher premiums. Second, Florida's legal environment has made the situation worse. For a long time, Florida has experienced a high rate of insurance lawsuits. Fraudulent and inflated claims, partly driven by aggressive partnerships between contractors and lawyers, have fueled this problem. This has increased claim costs, which in turn raised premiums and drove insurers out of the state. Florida has enacted laws to tackle this issue, and early signs of improvement are emerging. However, the market has already been significantly affected. Third, there is no simple solution. Citizens Insurance, the state's insurer of last resort, is handling more policies than it was meant to. Its financial risk during a major hurricane poses a serious concern. The National Flood Insurance Program struggles with ongoing deficits. Additionally, private reinsurance, the insurance that companies buy, has become much more expensive worldwide. Every part of the system is under pressure at the same time. This issue cannot be resolved quickly. Most analysts predict that Florida's insurance market will remain very stressed for at least another 5 to 10 years. In the highest-risk coastal areas, the situation may last even longer. So what does all of this mean for homeowners, buyers, retirees, and anyone involved with Florida real estate? It means the way we think about homeownership in Florida has changed. Before, you would calculate a mortgage payment and consider that your housing cost. Now, in many Florida cities, insurance costs are nearly as high as mortgage payments. Unlike a fixed-rate mortgage, however, insurance costs can jump significantly at each renewal. There are no limits, no warnings, and no room for negotiation. For current homeowners, the most important thing is to understand your total cost of ownership, not just your mortgage. You should also prepare your budget for potential premium increases of 30%, 40%, or more. For buyers, the key question before making an offer in Florida is not just about the current insurance costs. You should also inquire about what the costs were 3 years ago, what they are today, and what trends suggest they will be 3 years from now. For anyone considering Florida as a retirement destination, this doesn't mean you should avoid it. Florida still has a lot to offer. However, you need to select your specific location more carefully than you might have done 5 years ago. The cities on this list will still be here. The beauty is genuine. The lifestyle is real. But the insurance costs are real too. In Florida today, ignoring this issue is no longer an option. If this video gave you something to think about, drop a comment below and let me know which city surprised you the most, or share your own experience with Florida home insurance. If you know someone thinking about buying or retiring in Florida, do them a favor and send them this video first. See you in the next one.